Nothing said on the Touchgrass podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions only, not financial advice or necessarily the views of the Touchgrass podcast. Our hosts, guests, and the Touchgrass podcast team may hold positions in the companies, funds, or projects discussed. Enjoy the show.
GM everyone, welcome back to another episode of Touchgrass Podcast. I'm so much enjoying these trader series. Every trader I bring on, kind of helps me learn something new. We talk about trades, we debate, and it's always fun. And Kool Krypto is someone I found recently and who's also a trader on Hyperliquid, and he has very interesting theses around crypto and TradFi. So super happy to have you on. But yeah, welcome to the show, sir. How are you?
Thank you. Yeah, it's good to be here.
Awesome. Why don't we start with like a quick background about yourself, how you got into trading, how you got into crypto, and maybe any TradFi background you want to share?
Sure. Yeah. So I started mining Bitcoin in late 2010 to 2014. That's when I was in high school. So I was just mining it on my own personal computer and my friends' computers that I was building for them. And then I took a bit of a hiatus from crypto in like 2015, 2016. That kind of like coincided with the bear market there. I started a couple of other different businesses with some of the money that I'd made from being relatively early to Bitcoin. And then I really got back into it very, very early to that kind of like DeFi summer, ETH revival, or like late 2016, early 2017. The big reason was because of the fact that I thought it was so interesting and it really clicked for me finally that I could collateralize my crypto, borrow against it, go buy inventory for my businesses. But then in my off season for my businesses, I could then go generate yield in crypto. And it was like this very synergistic pairing that really escalated the growth of both my personal portfolio, but also my businesses. And even like, borrowing against my future sales, like future receivables to go buy more crypto at certain points was a huge moment. That I really was able to generate a lot more returns. And so like that really clicked for me because like prior to that, Bitcoin to me was like, okay, cool. It's this like super libertarian experiment. I was like big on it more from like that like macro level, but actually using crypto wasn't all that interesting to me up until ETH DeFi. And then once I saw that, I was like, oh, this is going to change the world.
Yeah. And when did you kind of start like managing your own book and take it, getting into the deck spaces, and how did you kind of where did you first start trading? How did you move to like some of these perp dexes and especially Hyperliquid?
Yeah. So in 2021, I got very lucky. I was getting pretty deep into high stakes poker games in my area, and I met a lot of very high net worth individuals who like I was kind of evangelizing DeFi to, and some of them ended up being super, I guess, faithful in me. They really wanted to invest. A lot of them convinced me to start a fund. So I started a fund in 2022, and pretty early on, the one of the underlying theses of the fund was that we didn't really know to call it perp dexes necessarily at the time. But like it was basically all about like we were very early to the whole tokenization, real world assets, and like all that trend and basically like the really fundamental portion of crypto, which actually didn't do incredibly well in the very beginning because it just didn't really catch that much of a bid back then. But we were extremely early to gains. We were extremely early to GMX. A lot of those early iterations like DYDX. Like a funny story is like, we launched, I think a month before the whole Luna crash, and we didn't even have like our actual account set up. So the only place that we could actually trade Luna was on DYDX at like 10,000 Luna clips, and so we're like over here like scrambling to figure out how to spin up as many DYDX accounts as possible to like hedge some of our Luna exposure. But yeah, the moment I saw perp dexes, like I was instantaneously entranced by the fact that it's like, okay, like this is actually a pretty revolutionary way of trading. This is going to probably change the world. And it was kind of that second time of like, okay, DeFi, like this is the next evolution of it. And so like we were very long the perp dex thesis from the very beginning, and we got it right until and we basically got it wrong until we got it. Well, actually, GMX didn't do too bad, but like we got it wrong until we got it extremely right with Hyperliquid.
Yeah. I think like most people don't remember, but during that time, the only place where you could actually short FTT or one of some of these tokens was like I think I remember Gains Network at the time
Yep.
did very well because they were like the early on they kind of listed it and every kind of still remember that when this crashed I think Gains went from $1 to $20 or something in like a couple of weeks, and so that
Yeah.
was crazy.
Right.
And I
Right.
think everyone,
Yeah.
I don't think that was not the movement everyone got pilled into perp dexes, but they were exploring other options.
Right. Yeah. Back then too. It's also like we were extremely bullish and early on more of like that revenue meta or that real yield that you kind of see being very good to be long right now. But like back then, it was just not actually that good. Nobody really cared how much money a protocol was making. Like L1s were making like $6 a year and trading at like $20 billion valuations. And so like we actually missed a lot. Like we've had good performance over the years, but we actually missed probably a lot of those opportunities by being a little bit too focused on like, okay, like these things need to actually
Yeah.
make money. But
Back
everyone's
then,
kind
I
of
think back then everyone was still debating modular versus monolithic, so I don't think
yes,
anyone
yeah,
really cared
exactly.
about how much. Anyone was looking at DeFi Llama fees, revenue, and
Yeah,
stuff like that. But I think
exactly.
Hyperliquid pretty much changed that. But
100%.
yeah, you know, one of the things we usually ask people, and this is like kind of humans of Hyperliquid segment maybe, but how did you discover Hyperliquid? What was your initial kind of reaction to it? I know that you said DYDX was like your aha moment for like perp taxes, but what any kind of difference when you started using Hyperliquid, and how
Yeah.
has the journey been so far?
100%. Yeah. Like we were very early on Hyperliquid. I think we started trading pretty close to when it was publicly available. So like late Q3, early Q4 of 2023, I want to say. Like maybe I think our first trades might have been like October, November, December. I forget exactly when. But quite early to it. Back then, my whole like overarching thesis to a lot of crypto was basically try everything, use everything, and then the stuff that I like, just buy a lot of. Because if I like it, the whole thought was that I've been doing this for so long and I've kind of seen so much that if I like it, other people will probably like it too. And when I started using Hyperliquid, it was just so instantaneously and so immediately apparent to me that it was like radically better than GMX, radically better than basically any of the other. And it was the first time where I was like, okay, no, this is like actually a real shot at disrupting the centralized exchanges. I think also too, like Jeff communicated a lot more frequently back then. Like now his tweets, it's like, like Jesus coming and talking to people basically now, but it's like back then it was a bit more communicative. And I think you could just tell something was different about the way that he was talking and just like the level of expertise that they had. And so it was very easy to be, I know it might sound a little bit hindsight biasy, but it was very easy to be extremely bullish the team very early on. And even for us too, it's like we were very big on like seeking yield. Like one of the big like tenets of how I trade is that there's only so many good trades per year. And you really want to maximize kind of those delta neutral, more like risk off returns while you're waiting for the next big trade. And so having HLP, and especially back in the early days, like, oh my God, you were making, 50, 60, 80% annualized for a lot of the early days of HLP. So it was so attractive to be in that and also be trading at the same time.
Yeah, it's kind of rare to hear these stories because usually every trader I talk to, either they were joined in the late 2024 or maybe 5 or 6 months before the TGE, or they were not as early, like when it just went live and trying it out. And you were right, like Jeff, in the early days, I still remember him going back and forth for feedback with the traders and just understanding
Yeah.
and explaining some of these things. That was so cool to see. I mean, I see it now because I sometimes go back to his tweets and stuff like that to see what he was saying. But yeah, that kind of I think the main maybe difference for you and others is you have already tried perp taxes before, so you could just see the 10x or 100x improvement there was, and that kind of helped your conviction.
Right. I think also too with a little bit of also kind of hindsight bias, it's like, HLP for them was such a core like bootstrapping mechanism. And I think the points meta that had kind of started for a bunch of other things really was just unnecessary before Perpdex could really attract so much extra liquidity. So I think there is a lot of right time, right place for Hyperliquid. And obviously like the team is beyond reproach and amazing. But it's one of those things where it's like, DYDX, I think actually a lot of, they kind of had a lot of principles and like core ideas, like very correct. Like they executed somewhat well on some of the same things that made Hyperliquid so successful. But what I think Jeff really revolutionized was between just HLP providing liquidity to the whole market and just the depth of liquidity, especially on like more of the long tail assets compared to DYDX at the time. It was just night and day, very, very quickly. And just the way that they approached, like the whole like no VC and everything. It was just like such a breath of fresh air. for crypto. So I think for them, I kind of like harp on this a lot too in some of my posts, is that like a lot of people hold current perp dexes to the Hyperliquid standard. And it's just one of those things where it's kind of like the immaculate conception. Like you really can't replicate what Hyperliquid had and what they did. And I don't want to say the first mover advantage in perp dexes, because obviously they weren't the first mover, but just the confluence of events that had to happen for Hyperliquid to launch the way that it did, and the massive wealth effect that the airdrop created, you just can't really replicate today right now. So it's kind of hard for a lot of these perp dexes to really compete with Hyperliquid because they just don't have the same set of situations.
Yeah, I think everyone tries to be hyperliquid. They try to do these buybacks. They try to do, these points program in a way that is, in a way they're trying to do similar things. They want to walk the similar path, but it's just not possible, right? Like it's different circumstances for each team. Like for example,
Right.
I'm a big lighter bull. I like the protocol a lot because of zero fees and stuff.
Yep.
And I always feel like they're like completely different things they're going after, it feels like. And even though some of the other RWA perps are just focused on that, and everyone's taking different approach. And this kind of comparison where this thing is this much FTB and this is so low, that's why this thing can re-rate. That kind of crypto mindset doesn't make sense because like even now, right? Like I've seen an article where saying Hyperliquid has a declining revenues over the last couple of quarters or something, and even still, despite that, people are rating it at a much higher level because the future growth story is so different than everything else.
Right.
Awesome.
Yeah. No, we've recently become bigger lighter bulls than we were in the past. Like I was pretty vocally bearish on lighter at the TGE, just because to this day, it's the same thing is happening with variational. And this is like no hate to the people who are bullish on variational as a product. But what people are basically doing is like they're opening an ice cream stand, they're offering free ice cream to everybody, and then they're going to annualize their sales out for the rest of summer based on like what their first day of free ice cream did. And it's like that's just not how it works. Like, when points come out, it's the same thing with lighter. It's like volume drops precipitously, OI goes completely away. Like there has to be an actual fundamental reason why people are going to use this. And so like all these people are throwing out like $100, $200, $300 point targets for variational based on its current metrics. But it's the exact same dynamic back then. Like I said, like I'm selling my entire, like we had a pretty decent sized lighter airdrop, and I sold it instantaneously pretty much, as opposed to Hyperliquid, where I bought at TGE. I sold everything on lighter at TGE, and it's not really any indication of the teams. It was just different, kind of like what I said, it's a different environment, different set of situations. But yeah, people always fall into this mistake of like, oh, let's like annualize it out and say what it would be relative to Hyperliquid and this valuation. And it's so unique. You can't really do it that way.
100%. And one of the things for Hyperliquid, right? Like I've recently put out a post. I think this was said in a couple of years, like maybe 6 months after the TGE. And one of the things I remember, I don't know who said it, but the easy road for Hyperliquid is going to be in the bear market, and maybe the tough road is going to be in the bull market because volumes pick up and the competition and right now it's becoming more evident with the competition is no longer just perp dexes for them. The competition is Robinhood, CME, and all these bigger guys.
Yeah.
And I kind of got so much hate for it. Like, how dare you be bearish Hyperliquid?
Yeah.
But what do you think? What do you think as Hyperliquid enters this bigger league? I feel like Robinhood is like a very big competition, and everyone is dismissing it because
I've been saying that for like over a year now. The competition that Hyperliquid is facing is not really going to come from within crypto, at least not to a large extent. Like they're going up against the Robinhoods, the Coinbases, the CME, like all of the big guys now, essentially. And so it's not to say that I'm bearish Hyperliquid at all, because I think the TAM expansion of perps is still relatively early. Like I think I said it was like in like that fourth, fifth inning, if you want to use like a baseball analogy. So it's like we're like halfway, maybe a third of the way through getting to like what I kind of see as like the final TAM of like perp dex is expanding into. So like there's still plenty of overall room for like basically the pie to grow for everybody to eat a decent amount in the perp dex space. But yeah, I very much so agree. Like the asymmetry of the Hyperliquid trade has large, and this is going to be very unpopular, but it's largely passed, in my opinion. That's not to say that it's not an amazing asset to hold. That's not to say that it's not going to perform extremely well. But the actual put $1 in, get 20 out portion of the Hyperliquid trade is just not really there anymore. Like the competition that they're going up against now, just kind of the law of large numbers of how hard it is to move a $60 billion asset, it's pretty significant. So, for the people throwing out price targets on Hyperliquid that are in the like multiple hundreds, it's like you have to have a really, really, really high conviction idea that Hyperliquid is not just going to win. Like that really is like the house of all finance thesis at that point. And it's not to say that I entirely disagree with it, but it's a lot more bullish than I would probably say I currently am.
Yeah, I think that's what I meant as well. Like the hard road probably starts from here. Yeah, we had
Yeah.
this good run up on TGE. We had this awesome, 300% pump during a bear market, which is probably something so surprising in general, but not so
Yeah.
surprising right now considering what it is. But the hard road probably starts from here, right? Like from 70 to 250 is probably way harder for Hyperliquid than, let's say, a lighter going from $1 to $10. That's what I was like.
Yeah. I will also say too, as like a slight counter to the point that we're making right now, it's important to kind of look at it in like two different contexts. It's like, I still think there's only like 300,000 or so addresses that are holding Hyperliquid compared to like the millions and millions that hold fucking Cardano and crap like that. And so it's one of those things where it's like it is still. Yeah, like I don't want to say it's like late to the Hyperliquid trade. Like there's still a lot of money that's going to likely rotate into perp dexes. Hyperliquid being the main beneficiary of that. And I also think too that it's like there is, and this will be a very telling and interesting thing to see when it happens, is that most US traders are obviously accessing Hyperliquid via VPNs. They can't do any marketing. It's all very like on the regulatory side. It's very difficult for them to actually really access the U.S. domestic market, and that's kind of part of the bull case of Lighter. According to Lighter bulls, at least, is that they're gonna have like a much easier time accessing the U.S. domestic market. But the thing is that like the actual addressable market of a Hyperliquid that can, without restriction, access the U.S. market is gigantic, right? Like that's such a huge increase in the actual amount of users and the actual amount of people who can truly own it. I will say that the ETFs and DATs like Hyperion and Per, they kind of conflate that a little bit because it's kind of hard to know exactly how many institutional investors who wanted to have exposure to Hyperliquid have already gotten it via those. I do know that just speaking from experience, a lot of institutions are not currently trading on Hyperliquid. It's kind of the reason why there are such prominent basically pure arbs with regards to funding versus RWAs and equities. The main reason being is because a lot of them can't underwrite the counterparty risk of Hyperliquid. They just don't really know, like, okay, we put $20 million on Hyperliquid and a hack could happen, right? And they lose it all. It's like they still are not comfortable operating in the custody space in crypto, just kind of in general, but especially in Hyperliquid. So like that's part of the reason why there's still so much opportunity there. But like when all of that money and when all of those people start onboarding, like I said, there is still a pretty large TAM expansion that's yet to happen, but just a lot of people are going to be going after it. So that's kind of a balanced take, I guess.
So we recently had the multi-coin investors who are the big investors in Hype as well to talk about their thesis, and they were basically like, "What's like the TAM for Hyperliquid?" And he just said, "What's the TAM for money?" And I was like, "That's such a kind of bar," but yeah, I mean, like, there's so much opportunity there. But what I want to ask you is, like, as a trader who owns and trades Hype, I feel like it trades very weirdly. It trades more like a traditional asset than a crypto token. Is that like accurate in your sense? I don't trade like it is very momentum driven when there's a big catalyst like a stock where it's a big announcement or something, and it trades very good. And then the rest of its time it's very kind of cancerous PA. But how do you think like it trades, right? Like I see it as more like a traditional asset rather than crypto token. Like if Solana always was very aggressive for the past two cycles, even though right now it's pretty AIDS, but like whenever it does have momentum, you see it for a sustained period. But for Hype, it just trades so differently. I feel, is that like accurate way of saying it?
Yeah, so it's a couple different things. Like I 100% agree that it trades in a very unique way. It kind of just so happens that in the unique way that it tends to trade has been extremely good for us because I think it trades a lot closer to its fundamentals, and I think that's kind of like the overarching point that I'm trying to make here. Essentially, is that like what is the like when you look at the TAM of Solana or ETH and the revenue that they're generating, it's like there's just not that actual, like there's not really all that much correlation to those basic fundamentals there, like DAUs, all these different things. It's like it's hard to have Bitcoin, a much better example too. It's like it's hard to have a very fundamental valuation framework for those types of assets, and the problem is that like that's why they're trading at such ridiculous ratios compared to Hyperliquid, and you have to contextualize that because they're just not really meant to trade at that same ratio that Hyperliquid trades at. Whereas Hyperliquid, like, there are so many different funds that trade it almost entirely quantitatively based on its revenue projections and that exact ratio of like how much money are they making, what's the float, all of those different sorts of things that are just very, very well communicated to the market. I will say that it's like when you are able to put such a precise valuation on Hyperliquid, the only things that really tend to change it all that much are these like massive news events. And like a good example of that is the whole Coinbase news with USD, or I guess it's technically Circle, but basically Coinbase, with USDC. I was shocked to see how long it took the market to price that in. Like that was actually where we flipped. Like we had been somewhat bearish and like mostly hedged on Hyperliquid up until that point. And then that's when we were just like, okay, this is hilarious. And we just like slammed like 45, 60 call spreads. Just bought a ton of exposure at that point.
I was on a vacation at that time and I saw this news and it pumped 15-20%. I was like, okay, this is pretty bullish. It makes sense. And the next day I opened up and I was like, wait, why did this whole thing, the whole entire move retrace and come back down to $39? It didn't make sense to me. Like, this is so bullish. They added like a big revenue stream and all this, the legitimacy that it adds and all that. And the market just shrugged it off. It didn't make sense. Like that was such a easy long, as you said.
Yeah, it's such a pervasive trend in crypto too. Like I've had to really kind of learn this for myself as well over time, is that like you will see events that you're just so like, this is so 100% bullish, like, and you're taught that like markets are efficient, efficient market hypothesis, all these sorts of things, and that things are priced in instantaneously. And especially with Hyperliquid, it's even more unique because they've done a relatively good job of stopping like information leakage, and so things don't really tend to get front run as much as potentially like lighter news, for example, seems to be a little bit more prone to being front run. And so like you expect this massive candle up and it's like, oh, this is going to go to 60 instantaneously. This is just an instantaneously like an instantaneous re-rating of their revenue up massive amounts. And then you just look for like a day or two. And I'm shocked sometimes to see, or like governance proposals is a good example of this too. Like you'll read something like, wow, this is crazy. This token should instantaneously re-rate. And you almost kind of start to second guess yourself. You're like, wait, am I dumb? Like, is this not as bullish as I thought it was? And then you just realize like, no, the market is incredibly stupid. Sometimes it just can't read. It takes them a couple of days to digest the information.
Yeah, I was like, a recent example of this was, I think it was Maple Finance, where they proposed a buy and burn kind of thing. And this is like very solid DeFi protocol that's been around for ages, and they've done an awesome rebrand to their thing. And it felt like, why is if ETH and this tokenization trend is going on, this should be like an easy like send immediately kind of thing. But it took like 24 hours after the vote, everything happened, to kind of finally realize that it should go up, and then it went up 15% or something. So we think that crypto is a little more efficient than TradFi, but every time you see some of this and you're like, there's so much edge to be had in just reading and being online.
Oh yeah, no, that is like such a like a fundamental point. Like if there's one takeaway from a lot of this, is that it's like there is so much edge to be had in crypto by literally just watching interviews, reading governance proposals faster than everybody else. Like go use DeFi Llama and go look at statistics and ask like, Llama AI, like, simulate 20% growth in revenue and see what, like there is such a ridiculous amount of edge on the fundamental side. But I would also juxtapose that by saying there is so little edge on more of the lower frequency, or I guess technically like higher frequency trading, the more like price volume types of guys. You are competing against like obscenely talented people in institutions on that side. So it's one of those things where it's like, it is such a good industry to operate in on a fundamental level. And it is the edge that you can squeeze out trading more like HFT-esque style, more scalping, more low time frame, like less fundamentally, is horrendous. So like that's something we'll probably touch on later, but yeah.
Talking about like crypto trader behavior and especially CT behavior, we've always had, it's very unique, this whole group on Twitter. How many of us, maybe 500 of us are active, but it's very unique how everyone trades and how everyone reacts. And I think this is especially because everyone is now trading we went from Solana meme coins to altcoins, and now we're trading equity perps. And it seems like everything we touch is getting, either we are topping it within few weeks, or we are just rotating ourselves into other classes and kind of just recting ourselves. But anything that you're noticing, I believe we talked about before the show, where there's the reason why this happens. Do you want to expand on that?
Yeah. So I think it's really good to be able to identify crypto regimes into, like, a lot of people say this isn't like a original thought of mine, but basically like PVE versus PvP. When you have this ball of money that's just, it's kind of like what you're describing, like there's like the same 500 people, a bunch of whales, a couple of liquid token funds who are all just chasing whatever the hottest beta is at the time. You basically have a situation where in order for one thing to pump, something else has to dump. Like, it's kind of like what you're seeing with like the whole like semis rotation right now in equities. Like, that hot ball of money is seeking a home somewhere. And the problem is, like, there just hasn't really been this really big exogenous like inflow of money into crypto. And in fact, if anything, like, money's been flowing out of crypto overwhelmingly. And so these rotations have tended to have been like faster or even more volatile because of the fact that that money is just chasing the new hottest thing. And so it's kind of like what happens, like what we talked about before the show. It's like, you're seeing the exact same concept happen in equities right now to an extent. And I will say it's actually quite funny to see how crypto and equities will kind of like the pendulum swings back and forth, where now equities are crazy volatility going up 30-40% in one day. And now they're kind of learning the same lessons that we learned with like SpaceX, for example, which is like, oh, like, we know what this is. This is high FTV, low float meme coin. That's why like the chart just, immediately shoots down. And so like now they're learning it. And then in the same way that we're learning, like, oh, this is a boring market and choppy and like fundamentals. And we're talking about like PE ratios now. We're like, now we're the suits and they're like the degen blasters. Yeah, like really identifying the regime that we're operating in and just knowing that there just can't really be a broad sustained market pump. And I think that's what makes this current market so ideal for like pair trading and statistical arbitrage, which is essentially just more quantitative pair trading. Because of the fact that it's like, for something else to go up, something else kind of necessarily has to go down, as opposed to like, you're just not really going to see this massive, a rising tide raises all ships movement in crypto until more money starts to flow in. And I think as long as that's the trend, you kind of have to approach the market a little bit more so in a pair trade, as opposed to just being absolutely long at any point in time.
Yeah, I don't know if you've seen this, but I saw that regarding stablecoin growth. We always say that everyone stablecoins the trend, you're so bullish on it. But when you go and see the supply of stablecoins, it has been pretty much flat or the same as last 3 years.
Yes,
And
that's a great proxy for what I'm talking about.
It actually shrinked 10 billion since 2023 or something. So it's like this whole, for some of the degens to understand this, it's same like cash cat going down, ANSIM pumping, ANSIM dumping, cash cat going down, right? So
exactly.
It's as simple as that.
Yeah. Stablecoin supply in crypto is actually like a very, very good way to kind of gauge like actual money flowing into crypto versus flowing out. And it's like you said, it's been relatively flat for a long time now. So there's just not that much money coming in to pump everything. So yeah, that's definitely a good metric to look at.
Yeah, and we can't talk about Hyperliquid without mentioning Trade XYZ and what they've been doing. Are you actively there as well? I know you said long and short, and I'm assuming you're long equities and short crypto if you are running one of those long short strategies. But how often are you using, or how active are you on Trade XYZ, and what do you think about them?
All we really do there is more so like delta neutral arbitrages, like specifically like with funding. I will trade more crypto adjacent equities. It's a bit out of our mandate to go blast like semis as a crypto fund. And so for us, like I try to kind of keep it to like a pretty narrow focus of like, okay, like we can touch Circle, we can touch Coinbase, we can even touch, Robinhood, I would say is like a fair game for us. But outside of those, in terms of like taking actual directional bets, like for example, we identified when Circle was trading at like around like 114 or 115, it's like, okay, this is a really, really good hedge for the crypto market. Like I thought Circle was really, really overvalued there relative to the kind of the power of self-determination that they had. I thought it was like, this was basically coincided with the Hyperliquid deal too. I'm like, wait, like if this is setting the benchmark for how much money they need to give up to maintain market share, this is horribly, horribly bearish for them. And that took way longer to get priced in by the market than everybody else, or than like FX too. And so like we put on a decently chunky circle short because we thought it was like a really good hedge to the rest of our portfolio, and also a potential hedge to like, okay, like what if equities are just topping here in general? Like this will probably come down quite a bit. But yeah, for me, like I know where my edge is. Like I've been trading crypto for like half my life now at this point. And it's just not that interesting for me to go try to get into markets that I don't really have that much edge. Like that's a big piece of advice I would give people too, is like you should not really trade assets that you don't think you have a pretty decent like fundamental informational asymmetry edge in. Like, you can know every little bit about Hyperliquid and you'll know more than a lot of institutional guys, and you'll know more than a lot of other like whales potentially, and you can actually beat them. But when it comes to trading like equities for us, it's just not our area of expertise, so I tend to avoid it.
Yeah, and a kind of example to that is, and I'm gonna add on to that, like why I don't do that as well is, like for example, there's Hyperliquid traders especially who own Hype. They've seen the price action develop over the last couple of years. They know precisely how it moves, why it moves at some times, where like I know so many Hyperliquid traders, when they go short, you take them more seriously because they are a much higher signal, because they have seen this thing move, they know how it moves, and them kind of taking those positions makes sense, rather than someone who's been in the meme coin trenches and suddenly they're buying Micron or Hyperliquid. So it's it's very contrast in that way, and also like for myself, right? Like I understood this memory trade was up like a couple of weeks ago, and when the earnings were out, and people were making this Nvidia Micron comparison, and it didn't make much sense to me, and just like first principles thinking, like it didn't make much sense. But I still didn't take the trade or short it in any way, because first I don't understand the equity markets much. I don't know how these things move, and I don't know how, and also the funding, all the trade XYZ is just too high. It's just too high to hold on to anything, even if you have a thesis. So it's just better to just trade Bitcoin or anything that even if it's like some altcoin that you like, as long as you understand how it moves on announcements and new stuff, you should be good. But suddenly picking up a new coin,
it's funny too, because like, Hyperliquid has been the largest position in our portfolio pretty much since its TGE. More or less, and it's been there have been times where it's been half or more of the portfolio, which I know to some people they're like, oh, like pussy, but to a hedge fund, it's like, to have 50% allocation is kind of crazy. So the funny thing is though, is that on our Hyperliquid like P&L for perps, by far, like I think over half of it is from shorting Hyperliquid. And it's kind of exactly what you're saying. It's like I feel like we have such a good intuition and edge on like, okay, like this is getting a little bit overextended now. Like let's hedge our position, buy back lower. That's been overwhelmingly the most successful thing for us. So it's kind of this funny dichotomy of the fact that like we're massive Hyperliquid bulls, and yet we've made most of our money by shorting Hyperliquid as far as like perps go, just hedging our positions. And it's like you said, it's like that's another like massive piece of advice I would give people is like, you will make so much more money trading 3, 4, 5 coins that you really, really just have watched for years and years and years. You fully understand every little teeny like catalyst and every fundamental, piece of information about it. Then if you just like say like, oh, SK Hynix is really, really popping right now. Let's go look at that. Let's go trade it. Like I do not believe that people can sustainably make money just by looking at a chart that they don't understand any of the context behind and just be like, oh, this looks bullish. Let's go long. It's like, it's not really realistic long run.
Yeah. And I think like people who are fundamentally driven, maybe just spot only, it may make a little sense. Like for example, if SK Hynix is like the leader in chip making, and they are only at 1.1 trillion, and this new Chinese lab is coming, which is like way worse technology, but they are opening at 650 or 700 or whatever. So you can be a fundamental allocator, but when you're trading these intraday moves, which are so volatile, even the indices, like even the Korean exchange, like them going down 7-8% every day, and like I think I've seen over the last week that a circuit breaker happened almost every other day, which is crazy.
Yes, yeah.
And you trading these exotic assets just because they're listed, and I mean, people want it, right? Like if people want it, you have to list it. But I just think that's not a good strategy, as you said.
No. It's one of those things too, where it's like, I think if you strip away the FOMO of seeing these massive crypto like moves happen in equities, if you strip away the boredom of crypto just being kind of shitty to trade for a long time now, and if you strip away this like delusional, at least in my opinion, thought that this is going to get rewarded with like, trade XYZ points or Hyperliquid season 3 airdrop points at a disproportionate rate, I think if you take those three thoughts away, most people would probably not really be blasting these perps if they were being honest with themselves about like where their edge lied, or like was. So yeah, I think if you kind of disillusion yourself of those three things, most people would not be going crazy on these perps. But I think they all kind of just fall into one of those three categories. So yeah.
Yeah, I think maybe people who have made a lot of money on hype, they're just. I know a couple of people who are just losing money on trade XYZ, but they're pretty much hedged elsewhere. So they are,
Yeah.
in case of an airdrop, they'll get a massive back, but totally get you. But I want to dive more into your style of trading. I know you mentioned long short. You try to, not just be net anything, but what's your usual style of trading? Are you like you hold positions like for weeks and months? If you have a thesis, like how do you guys trade? As just basically like how do you run your book?
So there's a lot of different like buckets that we kind of put strategies into. There's statistical arbitrage that we've run, like 8 figures in the past and was extremely successful. And for that it was generating like 3 sharp 120% plus annualized returns on capital. It was filthy how well it was doing for a long time. So like I won't really get too much into those because those just aren't really easily replicated for your kind of average retail trader. I actually I'm a complete layperson. Like I actually have no financial background other than just trading these markets, and so I'm probably a lot more relatable to people. I'm extremely fundamental. It's kind of like what I was saying before. Like I read every governance proposal. I listen to all the interviews. I spend a ton of time just like generally researching and reading. And I think what people have to get comfortable with is like with that style, I think your time horizon has to be a decent bit longer. So my average hold time for a lot of my trades is definitely in that like weeks, maybe not quite months, but like weeks time horizon. I pretty much raw dog all of my charts. I barely use any technical indicators. Like I will look at maybe like moving averages a little bit here and there. Like I think I've developed a pretty good intuition for like, okay, like this is where like this concept of support and resistance might be. Like this is where I want to place my bids. I will say that the way that I structure liquidity with regards to like placing my bids is probably some level of edge that I have. I think the scale function on Hyperliquid and Lighter are very underutilized. The degree to which you scale your orders down is really important, I think, in this market, because you really want to operate at the extremes. Like so many traders will lose 20-25% of their portfolio just trying to like they'll short 60 and then they'll long 64 and then they'll short 60 again and they'll long 64 on Bitcoin, and you just get chopped up a lot. And like what you really want to do is really execute in the extremes. And so for example, for me, it's like, let's say I think like, oh, okay, I kind of want to go like wick catching on Bitcoin. I might scale my orders down with like a 5 or 6 or 7x multiplier so that I'm overwhelmingly buying when Bitcoin's hitting 57, 58, 59,000, but then not really buying that aggressively at the current price. And I think that that's actually a really good way to kind of perceive the market. I think for me too, it's like I find it pretty intuitive to pair trade in this like very fundamental time frame. I think kind of like what I was getting at before is that there's just not that much money coming in to pump everything. And so you really want to kind of nail the rotations, and you really want to look at things that are fundamentally overvalued, fundamentally undervalued. I will say there it gets quite tricky because like, especially with regards to like, our statistical arbitrage strategy, like so much of the edge that you have to have in crypto is also knowing what not to short, even when it makes 0 sense. And so like there's time, I mean, like Cardano is still around to this day because of just short squeezes. Like every once in a while, they just like put in a 30% candle and then just kind of just like resumes its trend back down to 0 essentially. And so I never am net short crypto. I'm almost always in like a 20 to 80% band of exposure. And I think that's kind of like the last big thing I would say too, is that it is so much more valuable to have some dry powder set aside to really blast into those like extremes that I'm talking about, because 5-6 times a year in crypto, things just get wacky. Like there's a crazy event. I mean, back in the day, like, there was that week where you could buy USDC at like 80 cents on the dollar. Or like, for example, like trading stretch, I thought was like really intuitive to short at 99 cents and really intuitive to long at 75 cents. Like I thought that was like a pretty easy trade. There are some really free money opportunities in crypto, and the worst thing that you can be is to be fully exposed. and not have dry powder to deploy into those. So I think that 20 to 80% band for us at least is a really good way to do that.
Yeah, I've never been. I mean, I love discussing long short ideas, but personally, I never. I'm not that smart to kind of manage these things actively, and I always feel like the risk on the short side is just way too much for me to be an active. Depends on the size as well, obviously. But I know that so many times on Twitter, I see Han Solar and some of the pair protocol guys sharing some of the ideas, and it's always interesting, right? Like for example, some of the biggest ideas like just long hyperliquid, short all the high FDV garbage.
Yeah.
That worked for a good 1 year. And I think on hyperliquid is like the biggest vault by performance or something. So that's kind of funny. But yeah, I always feel like if I don't understand it very simply and I can't do it very in an easy way, it's just better to stay away. And also, I think that right now, I don't know why it makes sense to short some of your equity exposure, maybe, or like in a way to hedge it in a way. But I don't know why people want to stay short here, because if this thing rips, it rips hard, and it can be very dangerous.
Yeah, I will say too that it's like I am an advocate for pair trading, but I actually confine a lot of it to things that I have like a very, very strong fundamental thesis on. Like I'll give you a good example. Like I'm very bearish Uniswap, but I can also tell that because of the whole Robinhood chain, fees going crazy and just the false information that's being put out there. Like I'm not going to touch it. It's just not that good of a trade in my opinion, to go short at this exact moment in time. And if it rips, I'll like reassess it at that point in time. But most of my pair trades that I have found to be very successful, like I really nailed the Solana ETH long back when Solana was like high 60s and ETH was like 1500. And then funnily enough, I reversed it because of the Robinhood chain. I was like, oh, ETH's probably going to catch a bid off of this. And then I kind of caught both sides of it. So I like pair trades between the majors that trade a little more predictably. But yeah, if you start getting into some like really, really small coins, like the problem with those like long hype, short trash vaults is like they will overwhelmingly like you're at that point it's almost like a mechanical flows type of question. It's like Hyperliquid is buying back itself at rate. These are emitting themselves at this rate. Like it's going to trend up. It's not that crazy. But the problem is that let's say the whole market rips 50% plus on a Clarity Act type of thing. It's like some of that garbage is just going to absolutely eviscerate you on the short side. And it's so hard to risk manage that. And then you're trusting someone else to risk manage that. It like those types of vaults it's kind of like the whole like Thanksgiving turkey well-being up until Thanksgiving chart where it just goes in a straight line. I don't think that they're bad, but they're just very dangerous. And I think people are going to be misled by how good the performance has been compared to what it could be in the future. So, yeah.
Yeah, I mean, I don't trust walls that kind of label themselves as we're going to just do this one strategy, right? You have to be able to adapt, and that if they have shown that, fine. I've seen I've seen so many people on vaults where they start with, let's say, 100,000 and they run it up to 1 million. But that's because they couldn't adapt to some structural change in the market. One trade pretty much wipes their entire profits, and they just give back, like you said, the Turkey analogy. But yeah, I've seen you bull posting Aerodrome. You want to talk about like what you see in them? Because I've been pretty.
It's funny you bring that up. Like Aerodrome is one of the most confusing tokens in all of crypto, in my opinion. And I don't mean confusing as like with the insinuation of like, oh, why isn't this higher? I mean just genuinely confusing. Like I think their update is so complicated and so multifaceted that so like I'll break it down in terms of like levels of conviction. Like my highest conviction concept is that on-chain liquidity providing is fundamentally broken, that the Uniswap model is fundamentally broken. They can't turn on their fee switch and deprive liquidity providers of a meaningful amount of fees and still have them be willing to provide liquidity to the extent that they do. The problem is, and like, in the same way that like 95% of Hyperliquid traders lose money, I think the stats might even be worse for people who provide liquidity on Uniswap. Like overwhelmingly, they are losing money relative to permanent loss for basically like the whole LVR statistic, like versus rebalancing. And so the issue is that most people providing liquidity, especially on long tail assets, it's this fundamental mismatch where the amount of the amount of money that they're making is tied to realized vol and volume, and they are essentially short that, or they're basically long volume and short realized vol. And so like you know, how can you provide liquidity on a long tail asset when like a 20% move knocks you out of the range, but in the time that you were in that range, you were basically getting zero volume onto it. And so Aerodrome fixes a lot of those kind of core fundamental issues with on-chain liquidity providing with regards to like how they do like the whole like VE33 model and the way that they can direct emissions better at longer tail assets. For me though, like the Aero trade is very, very, like I said, it's very complicated because I think it's really, really good exposure to Base and Coinbase. I think if Base makes a really, really big push for Forex for tokenized equities via Coinbase, like you're really talking about like a pretty massive re-rating for Aero.
Yeah.
So I would probably say Aero is one of the most asymmetric setups in my opinion. That doesn't necessarily mean I think it's one of the best setups though, because of the fact so much hinges on this upcoming update. If they delay it, it's nuking. If it goes poorly, it's nuking. If anything goes wrong, it's nuking, right? And so it's one of those things where it's like, it's going to go into a pretty high volatility era. Like I tend to believe that the update is very promising. I think in the same way that like, you know, if people can't understand that Hyperliquid getting 250 million ARR from Circle is good for Hyperliquid in a day, I don't think people are going to read the Aero update and understand any of the implications. Like you have to have like a 5-hour-long conversation with DeFi Llama AI to like understand half the implications of like what it means. So it's one of those ones where I think it's extremely asymmetric, but it's also incredibly convoluted, and it is. I don't think the market will appropriately price it in until the actual ETH mainnet deployment, because it's going to be a very wait and see thing, I think, for a lot of market participants. Like they don't know what the update means. There's so many components of the update, so they're just going to wait and see what happens. And if it takes 40% of Uniswap volume on mainnet, okay, it's going to like $5. And if it doesn't, then it's going to like 20 cents. And so it's a very binary outcome, but I still think it's very asymmetric, kind of based on those numbers I just said.
Yeah, 100%. I think every trader I talk to always has this one thing, kind of a moonshot play, where it's probably less than 1% of their port or something. But it's kind of interesting, your choice, because I'm pretty, I'm not convinced in the Coinbase re-rating when there is no sign of that. But especially for Base, maybe Kobe taking over recently yesterday, the news maybe changes things a little. I think it's just become everything trading. It has to become their focus, and this whole create a coin. Let's onboard the world kind of narrative doesn't make sense for revenues at the short term. But yeah, I kind of was very curious, like why are you talking about Aerodrome? Because I don't see that many people, bullish DeFi coins these days. So it's quite interesting.
Yeah, it's funny too, because I think there's also, the reason I think it's so asymmetric too is because like there's this almost like stigma of thinking that like VE33 protocols are like total scams. They always just dump to zero. The emissions are crazy. And like overwhelmingly that's been like somewhat true in the past. And Aerodrome is really the only one because of some of the support that they've gotten from Coinbase. Like Aerodrome is kind of one of the only ones that has had any like meaningful traction or like longer term success. Or like Nest is a good example on Hyperliquid that I have like some exposure there too, because it's one of those things where it's like, okay, like if I'm bullish to this concept, I would like to get some exposure to it across the board.
Yeah.
I would say though that it's like if there's that kind of like one idea that I have that I'm like much higher conviction on, and I think it's like a much cleaner play, it'd probably be more so Derive and on-chain options. And the interesting thing is that these trade ideas are not actually all that different. It kind of comes from like that same core overarching thesis, which is that on-chain liquidity providing is broken, and that liquidity providers are selling volatility way too cheap on-chain, and that they will seek like better, more predictable, higher forms of yield. And so I think probably the biggest overarching thesis of the fund right now is that on-chain options will massively increase in popularity and TAM. And I think there's a lot of tailwinds for that thesis. And so the Aerodrome component of that is more so is I would say a less convicted but higher asymmetry thesis compared to like us being long Derive, which is probably a little bit more what I'm actually known for compared, like, yeah, because Aerodrome, like, I'll be honest with people, it's like, it's complicated. Like it is not a clean setup necessarily. There's a lot that can go wrong. Whereas I think the more overarching thesis that on-chain options will be the source of yield for all of these different vaults. Structured products will expand massively in TAM over the next couple of years, and that options tend to mature a lot after perps. And so like you kind of have an opportunity to run back the Hyperliquid trade with being long the right on-chain options protocol. This is actually part of the reason I'm also bullish Lighter too. Like I actually don't necessarily see Lighter's niche as disrupting Hyperliquid on perps as much as I think Lighter has a reasonably good chance, kind of with their connection with Robinhood and just like the way that the infrastructure is built. Like I think that they can do a pretty good version of on-chain options, and so like that's part of the reason I'm bullish Lighter as well.
Yeah, like few points like for regarding Aerodrome in the early days. I don't know how early you've been following, but no one really believed that the revenue was real. So like the way they marketed that revenue and how it was actually not flowing to the things you wanted to. So I think that was kind of where people were kind of abandoning that idea, because I know so many people who were bullish in the same way you are a couple of years ago. But yeah, I'm excited for that as well. And regarding like Derive, I mean, it's interesting, like with this whole Synapse shit happening, and people actually,
I can go on about Synapse, but
it actually makes people more bullish on Derive because it's actually real, and this other thing is not.
Right.
But yeah, I agree with you. I think this whole last 6 months, if you were an option trader, you probably would have made more money with less stress in crypto in general, where you could just take bets where you could properly hedge and you could probably navigate a little better, because it was so choppy. It was so like death to a thousand cuts kind of scenario for so many people. And a better options interface would have been better. And I think some of these, like a couple of years ago, it was awful. Right now, it's getting so much better. But yeah, I agree with you on both. Of that.
I think one bigger, like I guess like a little bit more points on that as well to kind of like flush out that whole thesis is that like there is a much more kind of like structural and regulatory arbitrage opportunity for on-chain options as opposed to perp dexes. Like it's not been incredibly hard to get access to perp dexes for people for a long time. Like it's not been incredibly hard for institutions to set up a Binance account, even if they're like US based, for a long time now. And so that like that, as good as Hyperliquid is, it's like what you see. There's like 60 other perp dexes that launched, after them. It's everywhere. The thing with options is that one, it's way more complicated to set up a on-chain fully functioning options chain, because at that point, like you're not like on a Bitcoin pair, you have Bitcoin. On a Bitcoin options chain, you have like 250 different strikes and expiries, and I think that's one of the big things that people really under like oh, Hyperliquid is just going to roll out options. And it's just not that easy. It really has to make them almost revamp their entire risk engine for a market that they probably perceive as much smaller, and they don't really want to disturb what they have going on that's working so well just for something that they don't like. And I'm not saying that they won't ever do it. It's more so that it's probably not as high priority as people think that it is. The nice thing about Derive is that it's actually deceptively difficult for some institutions to get access to options that are not OTC. Like most people are just facing Wintermute and Galaxy and Falcon X and Flowdesk, but it's virtually impossible if you're a retail trader to face those things. And so Derive is basically allowing you to go straight to those sorts of those OTC desks in a way that's never really been possible before. The other big thing too is that and this will be a much bigger trend going into RWAs becoming a lot more popular, is that I don't think RWAs are actually all that interesting on chain unless you can actually do things with them. And borrowing against them is not that interesting. You can already borrow against your equities in your Robinhood account or whatever. And so I think what options will allow is what are called like structured products. And so I think what Derive is really going to enable is people to create really particular payoff structures that even retail in TradFi can't get access to. Like you can't trade structured products in TradFi unless you have like a private banker and $1 million plus net worth and you're an accredited investor. Like all these different types of criteria that you have to have in order to trade structured products. So I think Derive is really going to open up a massive amount of payoff structures that just don't exist to people right now. Whereas like Hyperliquid is not as differentiated in what it's offering people compared to a Lighter, compared to all these other perp dexes of Binance or whatever. Whereas I think people just don't know how expansive the TAM of options. Like options is trillions of dollars. And so like the one thing that the Synapse guy is right about is that like options is a massive TAM that people are really under. Like we do agree on that whoever captures options in crypto is going to have a massive like re-rating. I just think that Derive has just been around for too long. They have too good of a team. They're all like SIG and Paradigm, like all the big options plays. Deribit, like they're all the kind of like 200 IQ options guys. And so like that's why I'm so long Derive. I just don't think people realize how large of a TAM increase is coming into options now that perps markets are quite liquid.
I think the Hyperliquid, especially them doing the creating, like it was so smart of them to focus on, let's just build the best options market for Hyperliquid. We'll attract this whole CT native guys, and even just get their attention, like if they would be allocating. So I think that was like a super smart move, because every time I'm seeing their like whatever content on Derive, it's all about this Hyperliquid call option, or this person made this much on hyper
Yeah.
calls or something. So that was super smart of them.
Yeah, I don't think people realize too that like the nature of like a well-built RFQ engine as well is that it's like, if you ask, like I remember this, like, you ask for a $35 call from all the big options desks like Wintermute, FalconX, Flowdesk, etc. And you will get radically different answers from them, especially on a high volatility asset like Hyperliquid, depending on how they're axed in like certain directions. Like they all have radically different views on volatility. And so like, and I'm not throwing anyone under the bus here. I'm just gonna like use hypothetical numbers. But there was a point in time where I think like, let's say Flowdesk offered us, $3 for a $35 call, and Wintermute was $2, and FalconX was like $1.50 or something like that. It was like massive differences for how expensive it would be. The nice thing about Derive is that they're all competing, and they're going through the RFQ engine and all you're seeing is the best quote. So even as an institutional trader who has access to these counterparties, it is so much easier and so much more pleasant, because like, let's say I do that trade with a Wintermute or with a Flowdesk or whatever, like that's a chat trade. It's literally just being like, it's like, oh, okay, cool, done. Like that's it. And then the accounting of that is incredibly annoying. Whereas on Derive, it's all like it's the entire point of on-chain. It's all easily traceable. It's all like the accounting is incredibly easy. The whole process is made dramatically simpler. So even as an institutional trader, like it is so much more pleasant to trade options over Derive than it is to have to go to independent Telegram chats and ask them what's this. They'll get back to you in 30 minutes or whatever. So yeah, I just don't think people realize. And the one other big thing I will say before I like stop, I don't want to just talk about Derive all the time. But the one other big thing is that it's kind of like what you were mentioning is that. If you are someone who's kind of prone to over trading, you will get destroyed in perps. Like you will get chopped up a ton. Whereas the nice thing about options is that there's always a trade to be had. Like if you want to be short volatility, if you want to be long volatility, if you want to say I think Bitcoin's going to go to 66K but not go to 68K, like you can get such levered exposure to such specific outcomes that there's always a trade that you can put on, and there's always something interesting to do. Whereas in perps, it's purely directional. So like, I'm not one of those people who thinks like, I hate the conversation about like, oh, perps are better than options. Like perps are going to obsolete options. Like it's like people saying that like hammers are better than screwdrivers. It's like, they're just both good tools, and they're actually much better when used in conjunction. And it's like, yeah, sure. Technically, I guess you could like screw in a screw with a hammer, and you could technically like hammer in a nail with a screwdriver. But at the same time, it's like, just use them for what they're good for, which is just putting them together. And
How much?
so like okay.
No, finish your thought.
I was saying like my personal trading on both perps and options has been made so much better by combining them, because of the fact that it enables me, like a good example is like, let's say that I bought a bunch of 60K puts on Bitcoin. Like this is kind of akin to gamma scalping, if people want to look up like a phrase, but it's like, and not even the best example in this case, but it's like, it gives you so much ability to really buy the dip at that point, not even by selling those puts, but by actually like layering a ton of exposure in terms of buying. Like if you sold 100 Bitcoin puts, or if you bought 100 Bitcoin puts at 60K, you can buy back 100 Bitcoin worth of perps exposure and actually catch the wicks like very confidently to the downside and not be massively exposed right now. And then the nice thing is like when it rebalances back up, you still have some of that intrinsic value on the option, but now you just like wick caught perps really effectively, because like perps obviously the wick way harder than options premiums do. And so yeah, learning how to trade both together I think is a massive value add, and I think a lot of people are going to start to realize that soon.
Yeah, I was just gonna follow up on that. Is how much of, let's say, on any given day, you have X percentage perps, or is it like, do you always have exposure in terms of options and perps, or is it like, what's like the composition look like in any given day, and how do you change it, or do you change it?
Yeah, no, that's a good question. It's incredibly variable. I will say that like on the notional volume on options, I mean, we've traded billions of dollars like year to date on Derive specifically, but just options in general. So, for us, it's kind of like what I was getting at before, where like you can put on extremely levered fixed loss trades in a way that you just can't replicate with perps. I'll give you a good example. Like back when Bitcoin was trading at like 84K, we loaded up on 70, 60K put spreads. So basically buying the 70, selling the 60. And it was super cheap at the time because Bitcoin was at like 84K at that point in time. So it was a really good way to hedge the portfolio. So for us, it's more of a function of like how do we price volatility? Like do we like volatility is relatively cheap right now, and so for us, like we actually have a lot of exposure on through options. But like I said, it's always about hedging those options with perps, because you can be much more reactive on options or much more reactive on perps, and they're like a much more flexible instrument if you just want to trade delta. But I mean, I'll give you an example. Like right now, like we have about as much money in our Derive account as we do in our Hyperliquid account, and so like we see a ton of value having a lot of options exposure on, I don't really see that changing. So. For us, it's like we've really leaned in more heavily to the options trading, especially on Hyperliquid year to date, and it's been extremely successful for us. So I kind of consider that being a continuing trend.
Yeah, super interesting. We're almost at the hour, and I have a couple more questions, cool, sir, before I let you go. What are your general thoughts on not just crypto, but markets in general, where we are at? Because I feel like, especially with TradFi, it feels like distribution at this point here, and everything has kind of exhausted. We're just rotating from semis to memory, and right now it looks like we're just rotating back to Max 7 with Apple looking good. But like, what are your general thoughts on markets in summer and heading into Q4? And any big idea that you want to share that, yes, you mentioned Aerodrome and Derive, but you probably are not allocating the same way. But any big idea that you want to share for the next, let's say, it doesn't have to be even ticker, it can be a trend as well. Like, do you see robotics as next big thing? But thoughts on that?
Sure. Yeah. No, I have a couple kind of like macro points I would make. I think any increase in the likelihood of rate hikes from here to midterms is probably a fade. It's probably a really good opportunity to put on some more exposure. I just do not think it is incredibly likely that we see any rate. And like what's weird is the market is pricing in some degree of rate hikes, and I think that they're pricing them in way too aggressively. And I think TradFi probably knows to shrug those off, whereas maybe crypto is a bit more sensitive. Like we still trade very correlated to Bitcoin, which is relatively correlated to like the tightness of money in general. So I would say fade any sort of rate hike dumps and buy into those pretty aggressively is a pretty good way to go about things between now and midterms. I think there's actually a really interesting case to be made. Like this kind of goes back to what I was saying about vol being relatively cheap right now. We're about to go into an extreme paradigm shift, I would say, in crypto between the Clarity Act coming and who knows what's happening. I mean, it's basically trading like near 50-50 for a while now. And then midterms coming up, which I think crypto is not going to be a major point, but it's definitely extremely exposed to what happens with midterms. I would say that a lot of people get lulled into this sense of like recency bias, where like, Bitcoin's been chopping from like 58 to 68K this entire like summer, and they almost like without even knowing it, they subconsciously get conditioned to like, like a big move is breaking out to 72. It's like, no, a big move is like breaking out to like 100K plus potentially on Bitcoin, because there are so many catalysts that can happen, or also going sub 50K, right? Like there's so many catalysts that can happen coming up. And so for us, like we really like being kind of along the wings of probability with regards to like what could happen with Bitcoin. I will say that I think there's way more asymmetry to the upside. I think that there's never going to be a Bitcoin strategic reserve, that Trump is going to get smoked in the midterms, that Clarity is not going to be good or it's not going to pass, that Saylor is going to go bankrupt. It's like, we've kind of started to climb over this wall of worry that's been happening for a long time now. And once again, like recency bias kicking in, and a lot of people are thinking like, oh, you know what, like, Bitcoin never going to go up again. I think the asymmetry that happens if the Saylor situation resolves, if Clarity is passed, if any mention of the Bitcoin strategic reserve, any of those types of things happen, the move that can happen to the upside is so much more violent, in my opinion, than the move that can happen to the downside. It's not to say it's more likely, it's just that it's so much more violent. And I think appreciating where the asymmetry lies is really valuable as a crypto trader. In terms of like other macro themes, it's kind of like what I said before. Like I tend to try not to really opine too much on stuff that I don't really have a high conviction on. I will say that if there was something that I do find interesting, it is the fact that robotics is kind of like the whole AI meta made manifest in like the physical realm. And so the problem with robotics is actually it's kind of a similar thing with stable coins, is that everybody knows it's happening and it's kind of hard to get really good exposure. Like how do you long stablecoin proliferation right now? It's like Circle, you can't really buy Tether as like equity, so it's one of those things where it's kind of a similar dynamic in robotics.
And if the best thing we can do is only robo strategy, I don't think that is it.
Yeah, exactly. And that's like the whole robo strategy thesis, is that like there's not really that great of an alternative. So buy us at like 6x NAV and we'll make it worth your while. And it's like, and they might be right. That might not be a bad way to do it. But to me, it's like, as I'm not high conviction and I'm not high edge enough in robotics to look at a robo strategy and be like, yeah, this is worth trading at like such a crazy premium to NAV. And I also just kind of have this like general like thought process. It's like, crypto is constantly relearning the mistakes that TradFi makes, and TradFi is constantly learning the mistakes that crypto made. And so it's one of those things where it's like, when it's trading at a 5x premium to NAV, pretty good chance it's just not going to look so hot down the road. So it's not something I really feel comfortable touching right now.
Yeah, I agree with you. Because I've been following the Clarity Act and see that Trump is stepping in to talk with the senators. And I mean, there's this whole ethics issue that I don't know. Like, I don't want to get into too details of this, but it just feels like there's so many things on the wrong side for crypto right now. And if one of those flips, it should be like a snowballing effect where people start piling in. And that will be pretty apparent at that point that, okay, vibe shift is actually real. But yeah, I think we're at the end.
One last point. One last point I would make there too is that people really understand this concept in crypto, that when the hot ball of money lands in the most ridiculous place, it's kind of usually the end of that local move. And so like you see kind of like, not to keep hating on Cardano, I'll hate on XRP for a change, but like if you see XRP pump 20% or you see meme coins go crazy, it's like you should pretty much know that you have like a 2 to 4 week time frame to get out of all markets. It's like that crazy mania that happens is almost always a local top in crypto. You're kind of seeing it in TradFi right now as well. The problem is that there's just not really anywhere for that money to go. So that money's looking for a home somewhere. So it's just rotating around. I think crypto kind of functions as the meme coin of TradFi though. So it's one of those things where it's like people have to kind of get comfortable with the reality that if crypto catches some crazy bid, it might just be like, it might be a month or two of everything going crazy and all of your expectations get shattered and Bitcoin makes a new all-time high. Yeah. And that is the forever top of everything. And I'm being a little bit hyperbolic, but it's like that really is kind of some of the ways that I view things, which is to say that like, if TradFi guys start really piling, like these are guys who've been hating on crypto for so long. If they start piling into crypto, it's almost like your grandma calling you and saying like, hey, should I buy Bitcoin here? Like you need to sell everything immediately. And so it's one of those things where I think people have to get comfortable with the reality that like, Bitcoin might hit 150K and then hit 50K within a 6 or 12 month time frame from that point, because of the fact that like that might just be the top of markets. So it's going to be a very volatile time period.
I definitely see that happening because I feel like we're just gonna buy Q4 October 2nd week, and it's gonna be the same kind of pattern. It probably will happen like that because we said the same thing about sell in May and go away and all of these things. It kind of fulfills itself like every year. But I agree that like this. I feel like we are setting up in a way where people are gonna be like caught off guard.
That's a good point too with regards to like fading consensus. Like sell in May and go away is a great example of like, okay, like this, like that was consensus. Everyone got kind of burned if they did that. Like May was a great month to be exposed. I think there's actually an interesting, and I'm not high conviction on this, but there's an interesting case to be made that everyone thinks that Trump is going to lose the midterms, and everyone thinks that that is a super, super bearish event for crypto, right? I think there's an interesting case to be made that, or I guess it's an interesting thought experiment to say like what really benefits from that. And so it's like maybe privacy coins is something that really, really benefits from that, because now everyone's worried about like, oh, we're going to go have some like, socialist 2028 type of thing where they're going to come and like, go after our crypto and stuff like that. I think it's also one of those things where like crypto did really well when it had a very adversarial SEC, a very adversarial government. And it was very counter narrative to a lot of that. And, Trump has not really been great for crypto, if we're being honest, just like empirically. So it's one of those things where it's an interesting question to be had where it's like, is there going to be a dump around midterms if Republicans get smoked? It's like, it's like totally possible. But is if the dump isn't that extreme, could the rebound actually be quite a bit more aggressive when people and Democrats might even come in and say like, hey, we actually align with a lot of values that have that like there are crypto. Like, this is a popular thing that we want to kind of add to our platform. And so it would be surprising, but it would be very interesting because it's so counter. it's so counter trend to what people think. To see midterms happen, small dump, massive pump afterwards, it would be not incredibly unlikely to see.
Yeah, I think it's like we always, I mean, we can go on about this, but the way sometimes Bitcoin shows this relative strength that we keep talking about, and sometimes you feel it, sometimes you believe in it. But yeah, it's maybe time to believe in it again. But this was awesome, sir. We should. This was like probably the longest we've done in this series. But yeah, thank you so much for your time, and it was a pleasure.